Great. Okay, great. Welcome, everyone. Thank you for joining us today. We are here to talk about finance's tokenized future, which is one of the most exciting topics in digital finance today. My name is James DiBiasio from DigFin, and I'd like to welcome you all. We have an hour to talk about this extremely important change that is happening in the financial services world with three people that are knee-deep in all of this. We're going to have an open discussion, nothing scripted here. We want to really have a chance to speak with everyone and really get a good feel for how they see the world changing and what their organizations are doing to help drive that change. So let me introduce them. We've got on my screen, I don't know if your screen mirrors my screen, but I'll start on top. I've got Emma Pecanicic from Fidelity International. She is head of digital strategy. She's also co-chair of the blockchain committee at the Hong Kong FinTech Association. And so she's been involved in blockchain related finance from the institutional side for quite some time now. Emma, welcome. Bienvenue.
Thank you. Good afternoon, everybody. Thank you for having me.
Then we've got Johnny Wijaya, who is head of Innovation Center for Asia Pacific at Bank of New York Mellon in Singapore. Johnny basically is in charge of doing all the digital finance strategy and execution for BNY Mellon in the region. Singapore is one of their 3 global innovation hubs, and it's quite an active one. It's not one of those sort of marketing gimmicks that all the banks put together a couple of years ago. It's still doing a lot of stuff. And I'm sure Johnny will give us a little bit of insight. But Johnny, welcome to the discussion.
Thanks, James. Thanks for having me. Good afternoon, all. And
finally, Henry Chong, CEO and founder of Fusang, one of the more innovative companies in this space. Licensed in Labuan, residing currently in Hong Kong, but kind of a man of Asia Pacific, really. You can find him in many places in the region and the world. Fusang has a digital asset exchange, which he will tell us a little bit about. And they are doing some very interesting work to promote the tokenization of securities. So Henry, welcome.
Hello, everybody. Thanks for having me here.
Great to have you. Just a word to the audience. Of course, we're going to be chatting amongst ourselves, but we really are here for you and your questions. So this is a very standard Zoom webinar. I'm sure you've been on these before. There's a Q&A tab below. So please be very liberal with hitting that Q&A tab. We would really like to hear what you've got to ask to the panelists. And even if you even want to make a comment, I'm happy to bring you up onto the platform if you can convince me that you've got something really cool to say. So we welcome you to participate as much as everyone else here. So with that, let me just very briefly, I'll just outline the way I see this topic. Since the advent of let's just call it blockchain finance, which goes back to the Bitcoin white paper of 2008, we have seen this take many different forms. And let's just there's private money, there's semi-private money, there's public responses in the form of CBDCs. We've seen in the very private end, speculative assets and meme-based things, all kinds of headline grabbing products, trades. Some of it's been rather unseemly as well. So plenty of funny business, but a lot of dynamism. But we're gonna, and I'm sure we'll touch on that crypto side of things. It is part of the ecosystem, but behind the scenes at the institutional end, there's been an ongoing drive across the industry to see how can we use this technology to create better ways of doing things with licensed, legal contractual securities. whether those are public securities or private, liquid or illiquid, using this technology to open this up to different types of investors, grow volumes, create ways for people to unlock liquidity and expand the markets. At the same time, there's been a lot of challenges in creating this ecosystem, getting it really off the ground. So we want to talk about the promise. We want to talk about some of the challenges. So I'm going to start with you, Henry, because you run a technology platform. You're at the forefront of trying to make these changes happen. You know more than anyone else how exciting this can be and also how difficult it is. Where are you? Where is Fusang right now? And what are you trying to achieve?
Well, thank you, James. You said that dynamism. I think that's the right word to describe this entire industry. And I think the reason why all of us are here on this panel, and I assume a lot of the attendees are as well, I think is because we look at the crypto and the NFT markets and we say, wow, there's a lot happening there. It's all very exciting. But man, when I look at some of the underlying assets, if any, it all seems a bit shaky. And I'm sure a lot of people saw even yesterday, Vitalik Buterin, one of the co-founders of Ethereum, say, oh, I don't know about a lot of these things being created on the Ethereum blockchain. I'm not 100% sure that creating NFTs around apes really was the original promise of a platform like Ethereum in the first place. And I think what's interesting is not a lot of people remember, but when Ethereum did its own initial offering, they actually put out, and if the original subscribers remember, their offering document had initial public offering stamped right at the top. And they said, yeah, we're a company, we're going to issue an IPO so that people can come and invest into us as an entity. And they very quickly realized, oh, that's problematic at a lot of levels. And that's when they coined that term ICO, right, as a coin offering, and said, oh, it's not a security, so it's fine, nothing to see here. And I think that's actually a little unfortunate because, as I said, the original idea behind blockchain tech and Web3 was always about, can we take assets or can we give people access to assets that you just couldn't get access to in any other way? And I worry a bit that we've been sidetracked with a bit of hype and speculation and etc. And at least companies like Fusang were very keen to bring back to that original promise and say, can we use this idea of tokenization, but to directly represent shares, bonds, funds, real estate, the other 99% of world assets, as I call it. And then we've built a platform where we think a combination of our regulatory licenses and technology platforms and kind of operational know-how let us take a generic asset or generic security, help with the issuance, tokenization, including the listing and trading.
What is the benefit though? I mean, this to me sort of reminds me of in the 1990s and 2000s when exchanges went dematerial, right? They went from physical paper shares to electronic record keeping and so on. Is it really just, are we just another version of dematerialization, or is there something a little more fundamental to this?
Both, I think, right? So once upon a time, we had paper shares written on parchment. We have dematerialization, and in a lot of countries, like let's say Singapore, you don't have to have a physical paper share, but people end up with a PDF or a line in a database or an Excel spreadsheet somewhere. And to me, tokenization is a next step into a machine interactable instrument, yes, and that will make it better, cheaper, faster, like all tech does. But to me, the really interesting thing, for any technology is what I call the layer 2 benefit, which is what can you now do that you couldn't do before you had this technology? And to me, when you look at really how any product in the world is sold today, like anything, right? You sell it online through e-commerce, direct, B2C to your customer, and you communicate online through social media. And today I can sell, I don't know what, I can start a table company, I can throw up an online store, I can ship to a global customer base, I can communicate to a global base. Just because I happen to be physically based in one country doesn't mean I can't interact with a global customer audience. But when it comes to fundraising for that same business, what do? I talk to friends and families, take out credit card debt. I could go talk to a bank, but hey, banks don't really lend money to a business plan anymore. Could talk to a VC firm, but hey, they want to invest in a high growth startup, not a table company. And we live in this strange world where actually funding options for a lot of companies and SMEs are worse than they were 2 decades ago. And I hear this time and time again from businesses where they say, I turn on Bloomberg and I hear about people talking about a zero interest rate environment. But when I talk to my bank, I can guarantee they're not willing to lend me money for free, right? What's going on here? And I think we have this massive disconnect now between public and private markets and assets, huge differentials in terms of rates of return, let's call it. And to me, that all belies an access problem. Somehow capital isn't flowing the way it really should be. And I think that's the real layer 2 benefit, as I call it, of tokenization.
Yeah, I guess I'd view that as we've seen the venture capital backed model of tech startups creating these amazing companies, at least many of them are amazing, and public investors have missed out. Companies are going IPO much later in the process than they would have before. And so the kind of returns you get as a public investor in the companies that went IPO in the 80s and 90s, you enjoyed so much more of that upside. But now they're saying private for so much longer that when they do finally IPO, the public markets aren't getting that much. Therefore, there's this huge demand for how can I get access to private markets? How can I get access to the top companies while they're still in their real growth phase? And so I think that's one thing that's driving this demand. But I'd like to hear from some of our other panelists. What is the issue of tokenization, those second layer benefits? Johnny, you are at Bank of New York Mellon. You have been involved in all kinds of innovations from API layering to blockchain. How do you see tokenization in the scheme of what's important right now for security services and providing support to this ecosystem?
Yeah, just extending to what Henry has shared earlier, right? I guess, from a security services perspective, from a global custodian perspective, today, we provide a custody and servicing to 47 trillions of assets of our client, both asset owner and asset managers in more than 100 markets around the world, right? So it's really about the trust, the skill, and the resilience, the regulatory compliance. So that's one piece, right? So the second piece is that on that note, as we see the rise of mainstreaming of digital assets, whether it's a crypto or tokenized assets, you need to have that scale of infrastructure, which is what we have been focusing on, and that's really something that is also what our client has been expecting from us, right? So so a couple of things really that is key really from a servicing perspective. The three things that client is telling us. Number one, is important to focus on trust and soundness in the sense of focus on risk and compliance, regulatory compliance, risk management. Know your transaction, know your client, know your service provider, all those kind of stuff, right? And you must have really solid procedures around it. The second thing is that it's really around that institutional grade kind of solutions, in the sense that the scalability in the sense of the ability to support the multiple type of tokenized assets, including those in the public space, the likes of the cryptocurrencies, right? And then also how do you deal with some of those unique corporations that is unique in the context of digital assets, right? Things like in the public space, you hear the fork, the airdrop, and all this kind of stuff, right? And the third thing is also about how do we deliver that capability in the way that's seamless. So what our client is telling us is that, look, I think whether it's traditional asset or digital assets, I need to have an integrated way of for you to safekeep and servicing those assets. And that's what we are working towards. How do we create, our aim is to create that integrated capabilities that allow us to support our client who's actually would like to invest in these tokenized assets, right? Along with their traditional assets in the way that's integrated and seamless. So that is really sort of like the focus of we think is important as building up this capability.
Can I just ask you, Johnny, how does that work? Because there is a spectrum of things that in digital asset space. So if we're talking about a cryptocurrency like Bitcoin or something, then obviously that is very different in terms of everything, reporting, accounting, valuation, et cetera, than traditional assets, whether they're alternatives or public securities. But then if we're talking about securitizing stocks, bonds, taking normal instruments, and they're still doing the same thing, it's just that they are being process that, you know, they live and die in a purely digital format. Is that the same level of integration? Is it a completely different integration, or you know, where are we with being able to adapt existing forms of security and but in a digital format?
I think it's a combination of both, right? So when you talk about tokenization, essentially there are three unique opportunities, at least from our point of view, right? So first is really about creating a more accessibility, right? To make it easier for people to actually invest in those assets, because they are more digital, they are digital native, they're not going through a paper-based process. And not only that, the one of the unique feature of the tokenization is also ability to do fractionalization from the onset, right? So essentially it's lower the entry barrier. The second piece is of that, obviously, as the assets be natively dematerialized in the digital format, is allow it to move up to the value chains a lot faster. Therefore, it's allowing to creating more liquidity, right, through the secondary tradings. And I think it's also importantly as well, you know, how can we create more utility around the assets in the sense of liquidity, lending, collateral, and stuff like that, right? So coming back, efficiency, liquidity, mobility, I do see that the three things actually the three things actually come hand in hand, and it's something that is going to be important as we drive adoption for these assets. Right. Then the second thing is that I think that is really important is that, does everything need to be tokenized? I think we need to ask ourselves that really hard questions, right? If it doesn't create the benefit of accessibility, the liquidity, and more utility, that's probably not addressing the concern, right? It's just like saying like not everything needs to be blockchainized, not everything needs to be machine learning or machine learn. I think that is what I think the whole industry is trying to figure out and correct. What is kind of like a good type of asset to begin with, right? I would say that generally stuff that is paper-based, a lot more sort of a manual today, seems like a good start, but I don't think everybody have the answer. And the second thing is also there's a new set of problem. For example, things like the green bond or the carbon credit, where the greenwashing is a big issue. The traceability of the green credential is an issue. The immutability nature of a blockchain seems to be a natural fit for that, but time will tell.
Okay, very good. I think we're going to come back to some of these points, Johnny. Emma, I'd love to hear what's going on at Fidelity, major buy-side player. You represent the international arm of that business. Where do you see going as, you know, when you think about blockchain-based finance, what's the use case? You know, what makes it interesting to you?
Yeah, as an a large investment house, we're in between, I would say, Henry and Johnny. So basically, we're looking at things in two ways. How we can tokenize the product that we are issuing, so the funds, and there we're seeing a lot of benefits in terms of distribution. So being able to distribute that to digital asset exchange, to touch new type of investors, benefit from the fractionalization, as Johnny said. But those are, I would say, the benefit in terms of sales opportunities. But there are a lot of operational components that blockchain enable, such as being able to basically streamline the value chain. So from the custodian, the transfer agent, the auditors, being able to enable basically bring on more data to investors, potentially bringing distributors on, and for the asset manager being able to have the full transparency in terms of who owns your shares, basically the fund shares. Today we don't have necessarily that transparency, so that we can provide better advice and recommendation as well to the end customer. So this is on the fund tokenization. Then we have, how do we include digital assets in portfolios? So in the traditional finance space, like outside of cryptos, I would say we're looking at tokenization of securities. So how to partner with banks or platforms like the one of Henry in order to integrate security tokens in portfolios. So here we see a lot of benefit on the private assets. So I think this is where Johnny said there is a lot of attractiveness in looking at assets that are illiquid today that we could fractionalize and potentially make that more liquid in the future, but as well embark a lot of data inside the token. That's the benefit, right? Because since with the fractionalization, the assets are smaller, but we still need to do our job as an asset manager in the investment process, right? To analyze and do the proper, deep dives in terms of credit analysis, equity analysis, and that's the opportunity, to bring on a lot of, information in order to fasten that process, but as well bring on new data. So back, on the ESG space, so this is where we can, combine those, financial and extra financial analysis inside the token. So on both aspects we are working, and as well on pure crypto, we're looking as well. So we have issued an ETP in Europe, an ETF in Canada. The one in Europe is listed in Germany and Switzerland. And we're looking as well how, crypto, I would say cryptocurrencies, those type of assets, basically can be integrated in portfolios, and as well, how we can build up a crypto offering. So
I want to
those
go
are
back.
the kinds of things that keep us busy.
Yeah, no, that's super interesting, Emma. Thanks for sharing that. I'd like to ask you a little in more depth about this idea of using the blockchain technology's benefit is that you can embed the data directly into, the token itself. So that, i.e., if we're talking about an ESG portfolio, for example, a tokenized bond, for example, could include with it automatically, you could just draw down, I guess, I don't know how it would work. I'm not a technologist, through an API or something where you would then, as the portfolio manager, will be able to see all the corporate carbon emissions data, or the exchange's rating, or an MSCI rating of something.
Exactly, and you can embark, all those auditors, sustainability auditors that tend to be all specialized, so on carbon credit and then on governance and so on. You can embark them all in the same platform in order to have, more transparency and basically have the deep dive analysis in terms of we did the carbon computation, who approved it, where on earth come those figures, basically. So, so that you are more comfortable with those. So I think that's the opportunity to bring on transparency.
Right. So if Fidelity, let's say you're holding some of those bonds or securities from a given company, and you want that information, but then you decide you go into the market and you sell that bond to somebody else, then whoever is getting that bond would then, the information just goes along with the security itself. So all of that data, all of that history goes with the trade.
I guess it's done more at the issuance process, that us as an asset manager, adding on some data, but that could be a new idea to explore. Yeah. Thank you, Jamie. To add on tokens to tokens. But yeah, I think it's more at the issuing process that this happen, and how you make the flow of data happening, quarter after quarter in order.
I'm just saying that the data goes with the token. So the security itself, whoever holds it might trade, but that initial data that was embedded into it at birth goes with it, and so then it's very easy for everybody to know who's got what, and the history as well. Henry, so we've been hearing some very interesting ideas from the buy side and from the security services banking side. Where are we with adoption? This is really, I think, the hard part, because we're talking about we need to get lots of Emmas, and we need to get lots of issuers, and we need to get brokers, and we need to get service providers. We need an ecosystem for these things to actually work. We have to get somehow beyond the pilot proof of concept phase. What's actually happening?
I actually think the most important piece for all of that is the right asset. If you have an interesting enough asset, a lot of those other pieces fall into place. People who want to buy it, people who want to provide asset servicing, etc. And I actually think the single biggest challenge facing, let's call it security tokens today, is actually how prevalent non-security tokens like cryptocurrencies and NFTs are. When Fusang first started this journey back in 2017, I remember there was this environment where everybody believed that imminently a lot of tokens were about to become regulated, where if I was going out and fundraising for a company that, like it or not, that was going to be deemed a security. And in a lot of countries, including in Hong Kong, the SFC was actually doing dawn raids in people's offices and trying to shut down projects. But for whatever reason, a lot of that seems to have gone away in the last few years. And the honest truth is, today, if I can issue a token as a company, or if I can issue an NFT, not linked to any assets, with no particular rights, and I can fundraise. For a lot of companies, it's just like, well, why not, right? If I'm the Aston Martin CEO and someone comes to me and tells me I can sell a picture of my car and raise money, well, sure, let's try it out. If it doesn't work, we just cancel the token, no big deal. So I think the biggest issue actually is that there are too many assets that are too messy. And the transition that needs to happen is investors, including institutional investors, saying, look, this is all very interesting, but we want to focus a little more on asset quality. We're not going to get caught up in the hype and speculation. We are going to require that assets start having something a little deeper, just as I would in traditional markets. And when that happens, and when issuers say, okay, no one's going to buy if I just sell an NFT anymore, I do have to do this as a regulated security, that's when the entire machine will really start turning. But I worry that not enough people are asking those questions about, hey, what does this token represent? And they're getting caught up in what I call the technology layer, right? They're saying, oh, if it is a token, it must be cool. And the same is true for security tokens. Just because something is a security doesn't mean you should buy it, right? You got to ask, number one, what kind of, what's the nature of this token in the first place? Is this a share? Right? If I hold this token, do I become a registered shareholder of a company? Am I actually buying a swap or some kind of other derivative? What is the structure of the token? And then, of course, well, the underlying entity or the company, is it a good company or not? Do I actually want to buy into it, etc.? And I worry that in the digital asset space, somehow we forget to ask kind of very basic investment questions.
Yeah, it's not just digital assets, of course. I mean, it depends on the audience you're going for. I mean, if you're Robinhood day trader and going after GameStop memes, then of course none of that conversation, which should be happening, is happening. But I think we're talking more really about here. We're talking about professional institutions, yes. And so I guess.
But the honest truth is, I see that for professional institutions too, right? An awful lot of people are very interested in trading a lot of NFTs today, right? There is money behind it. Is the truth.
I mean, institutions like hedge funds and really, super active, managers have been looking at that. We see more traditional players have taken, a cautious stance and really looking at, trying to understand, what's driving, what is the core value behind, those assets. And, that's the same for security tokens, right? Because you see, a lot of security tokens being issued, but at the end, it's just, the issuer that wants just to upgrade the value of the overall building, let's say, for a real estate token. So there is no, interesting, value for another investor to be part of that, just to, upgrade the value of that building, for example. So, I mean, back to what you said, I think, going back to our finance fundamentals is quite important, right? And basically trying to pick, what makes sense. And here, I think, back to what we said, I think it's on the private asset space that, there is a lot to bring, and, both on the issuer side, because banks, don't serve properly those companies, and on the, investor side, there is a hunt for yield, obviously. So I think this is where, tokenization can bring a lot, basically. Yeah.
Yeah, John, I just want to get your take on this adoption question.
Yeah.
Lots of chickens and eggs, right? Who has to go first, do you think, to make this really work?
No, I think I look at this as just any type of physical infrastructure type of effort. Mm-hmm. Just like you're building a new railway or airport. You don't get the traffic immediately on day one. You got to start building all the connectors to the place. But certainly once it get connected and you start realizing the benefit, and you start to create the network effect. So I guess we are really at that state now. I think what we really need to be more mindful around is, how do we be more effective around it in the construct of a minimum viable ecosystem, if you may, right? How do we create less fractions? But ultimately, we're talking about tokenizations here. We're talking about regulated kind of assets. And that also goes hand in hand with the regulatory guidance. Yeah, so I do see, I think there is a potential here. I think Henry and Emma really have hit the nail, right? Picking the right asset, it must serve the purpose, right? We started with it must unlock the illiquid assets. So if it's not serving that purpose, then it doesn't serve anybody's needs, right? And second thing, better, cheaper, faster, right? So this piece of technology essentially will gonna help us remove away a lot of frictions and the need to reconcile all the time. If you think about the number of reconciliations going through across the whole industry today, potentially, may get sort of, we're gonna be able to create efficiency around that. And the last thing is really, yeah, I think we only scratched the surface here, because the programmability feature of the blockchain, which is all we talked about earlier, right? About, how can you program the assets right up front? I think there's still a lot of use cases that we haven't really able to benefit from that today. But that is a process. So in short, what I'm trying to say is that I think this is an infrastructure play that we all need to invest. We need to look at it that way. But while we are doing that, we also need to make sure that we don't keep building infrastructure without creating that liquidity into the infrastructure, which is again the effort that we all need to do, either by picking the right asset class, getting people more educated, getting people to try and see benefit out of it, and at the same time as well, the service provider is also upgrading the infrastructure to make sure that it connects.
Yeah. Okay, but that's a lot of upfront costs, though. Which is never easy to you got to fight for that throughout the organization. As we're going along, I just want to remind the audience that we welcome your questions. We hope that this discussion is stimulating some ideas. So please hit the Q&A button, and we will get to those. John, I just want to go back to what you were saying. The right asset class, the right fit. Are you seeing issuers right now looking to tap digital asset technology to unlock value in things? We've heard a lot about it. Is it really happening? And how long before it begins to gather some kind of momentum?
That's a hard question. I don't have a crystal ball for that, but certainly I think we are slowly getting away from educations into actually trying stuff. Mm-hmm. I think there's a more and more appetite in terms of, can we start to try to tokenize, this type of asset versus the other type of assets, right? But I think, my view is that anything that is very paper-based today seems to be a good area to try this kind of stuff, because you immediately could see a benefit if it is true that there is a benefit on that. And also any space that is new, right? Things like carbon credit, for example, where I have this really challenging situation with the greenwashings in terms of driving adoptions, or anything on that type of notes, right? That seems to be a good, starting point. Ultimately, if we talk about innovation and new stuff like that, is, as you say, chicken and egg, right? At the same time as well, adoption matters, right? Because they fit in each other's. Right? Sure. The more adoptions, you get a more data point, then you can calibrate, and then you try again, and you just keep, reinforcing. And at some point, I think we'll get mainstream somewhere.
Henry, what are you saying? Like, what do you think will happen in this calendar year? Still springtime 2022. Is this going to be an interesting year for tokenization?
Yes, and as some of the other panelists have said, there are, I think, a lot of specialized use cases in terms of workflows and etc. At least what we as a firm are looking at as kind of step one, let's call it. And I think also I see a question asking about, hey, basically, where's this going to start, right? What are the first few assets that are ripe for tokenization? At least for us, we're focusing a lot on things like companies and company shares. Right? So even without worrying about, let's say, a more complex bond issuance workflow, but even just the idea of, can we swap out a paper-based company share? And as I said, to me, a PDF of a share cert is still paper. For a digital token, there's already enough benefit to doing that. Fusang ourselves, right? We have taken all our shares, swapped them out for digital Ethereum-based tokens. Even just doing that one thing and allowing shareholders to potentially transfer shares between each other and etc., without needing to tell a company secretary or a transfer agent to update centralized databases, report to registrars, etc. To me, that's already a big enough layer. One point maybe I will disagree with you, Johnny, is that I do think in time, all assets everywhere can and will be tokenized in some form. How exactly that works remains to be seen, but I am convinced that we're not going to have pieces of paper represent assets forever. I do think that certainly companies, for example, it makes no sense to have, even when I say paper, no one really holds paper anymore, right? And yet we almost have this fiction, if you will, of a paper share. Really, all the data is still digital. It just sits all over the place in all kinds of databases. Again, that makes total sense to represent on a single blockchain-based layer instead. And really, to me, any company, right? If you want to incorporate, why not incorporate on day one using tokenized shares? Obviously, you can't do this in every jurisdiction, but I do think there are enough places where you can do so, and you can do so today, actually.
So that leads me to ask, this is also then a regulatory issue, even in non-blockchain considerations, even if a security is completely electronic in reality, but there may still be a requirement that there's got to be some piece of paper somewhere.
Yes.
And this might need to change. So I'd like to ask you, and the question that came in was for Johnny, but I think, Henry, you might have a view on this as well, is what region do you see the most experimentation going on in tokenization? So is it Asia? Is it USA, Canada? Is it Europe, or is it emerging markets? Henry, why don't you tackle that first? And then Johnny, because you work for a global bank, maybe you can give us some flavor of that as well.
Yeah. Well, sorry to always butt in, but no, I think that obviously in a digital world, geography matters a little less than it used to. I think you've hit the nail on the head, which is that it's about, can I operationally do this or not? To me, actually less even a regulatory consideration. So again, Fusang as a firm, our view has been, if you're going to take a share and create it in token form instead, you shouldn't touch anything about the legal nature of the share. So in terms of, let's say, how rules work around equity, that's pretty well understood, right? It doesn't need to change per se. But in some jurisdictions like Hong Kong, for example, yes, for private companies, there is a physical share requirement. There's a requirement for effectively physical stamp duty. So these more operational issues, I guess, to me are the main roadblocks. Right? There are very few company registrars that will let you pay stamp duty via API, right? And a lot of places, technically, title doesn't transfer in a share until you've paid stamp duty. So it doesn't really matter if you kept records on a blockchain. And in most places, actually, that would be totally fine if it's, I'm always having to kind of manually file stamp duty and sync records. And I'm back to square one, effectively. Likewise, to me, the other big issue that I'm seeing, and not just in security tokens, but in crypto assets generally, is identity, right? The whole world of assets today is built on a fundamental principle of I have to link every asset to a UBO, an ultimate beneficial owner. And that includes cash. Let's face it, when I keep money in a bank and I transfer it from bank to bank, they need to send my ID information from person to person. Trying to transact in cash that's delinked from identity. If I try to buy a house with a bag of cash, people will call the cops, right? It's quite hard to move assets without identity. And when this weird world where we've created kind of pure crypto assets that in many ways and many blockchains were intrinsically designed to not have identity, and now we're having to layer it back on top because people are realizing, oh, I have to do KYC and I have to do this. And now people are talking about travel rule to send identity back and forth and almost back to square one of silos. So to me, my very long answer to that question is, there are enough jurisdictions where we don't have operational issues, right? Where you can take a company and issue native shares because you don't have some of these like stamp duty and et cetera issues. But the real key that people I think need to focus on is this token linked to a real asset? And can I link this token to identity in a way that is expected under regulation today?
Right.
Just adding to Henry, a couple of things really, right? So I'll say that it's global. It's happening actually in many geographies. I think for some sort of jurisdiction where you have a pretty established infrastructure today, this becomes sort of like extension to that, right? Or upgrade to that. For some places that maybe do not have as well established infrastructure, maybe they're able to leapfrog and they go straight to sort of a tokenized based on infrastructure. But I'm glad that Henry talked about cash, because tokenizing the security of asset doesn't necessarily mean that everything will be well, right? Because those assets still need to be settled with the cash, which is where the tokenized cash itself is actually quite an important part of the play as well, right? We see a lot of effort around the stable coin, the CBDC, or even the deposit token, which is essentially tokenizing your cash deposit today.
Okay, good. So these things, we need to see action on multiple fronts for all of this to move forward seamlessly. Yeah, and Emma, obviously you work for a global organization. Where's the most action at Fidelity? Is it in Europe? Is it in Asia? Now that you're on board, I'm sure there'll be more here, or is it the Americas?
Yeah, I mean, Fidelity International, we cover Europe, Canada, and Asia. I would say, on this tokenization topic, this is really a global topic, and actually we're quite regionalized, but on digital assets, this is where we have global conversation, because you need to set up that global infrastructure that can serve the world, right? So I think that's the overall benefit of it, but at the same time, back to what Henry said, there are some regulatory challenges, right? So because, STOs, for example, are not taken in the same way according to jurisdictions, or even cryptos. In Europe, marketing crypto assets is still not, implemented, fully, not implemented. So, for now, it's still, fractional, like different type of regulation, France, Germany, Switzerland, not being in EU, but people look a lot at Switzerland, the UK. So it's quite difficult. You have a sort of regulatory arbitrage that you do for your first proof of concept MVP, but then when you want to scale, this is where you need to look at it from a really global perspective. And yeah, and just I want to comment on something that Jenny just said on the importance of settlement coin, not necessarily stable coin or or CBDCs, but if we want the two legs to work, settlement, and both on the security itself, but as well on the fund side, we need settlement coin, and that's where you have the full benefit of the blockchain, having your fund on the blockchain and the securities on the blockchain. Basically, if we don't have that, it's really difficult to make it happen. And that's why, as well, again, I think this will be across all, assets, because we're managing multi-asset products. If we want to have the full benefit for the client, you need all assets to be tokenized. If you still have some legs that are not, how can you offer, instant settlement, 24/5, maybe 7 one day, I don't know, type of settlement. So yeah, that's why I think it needs to be across assets at some point.
Okay, very good. We've got a question from the audience. I'll put the question out there because they asked. I'm gonna maybe massage it a little bit. So the question is, and thank you for the question, we welcome more. Do you see none or some kind of comparisons between the privately issued cryptocurrencies to subprime CDOs before that market disappeared? So obviously in reference to the subprime mortgages in the US in the 2000s. And so the question, the person asking the question did say this is only about private crypto money, not about blockchain of all assets. So thank you for the question. I'm happy to have one of our panelists answer that. Of course, today we're really focusing more on the regulated space as opposed to pure private crypto. And I think I would just say that I think there is definitely a comparison between DeFi and subprime CDOs in the sense of a highly unregulated, opaque shadow banking system that is emerging that to get around things. And the subprime mortgages did have a use case. They had benefits when they came out, but I think you can have too much of a good thing, and that the benefits of that innovation were eventually swamped by the problems of that shadow banking arrangement in the U.S. But maybe Johnny, would you like to give us? Do you have a sense or any thoughts on the crypto side, looking at that versus what happened with the subprime mortgages?
Well, I guess a lot of what we do is driven by the client and big service provider. I think our focus is on the servicing of those assets. I personally am unable to comment on that. Maybe any other panelists will be able to opine on that.
Well, maybe if I could just expand on what Emma was saying about settlement currencies. I think this is exactly why things like CBDCs are so important. Like it or not, if something is a fiat currency, governments are going to want to control all representations of their own currency, not least of which is because stable coins, which I suspect a lot of people in the crypto world view as stable, uncontroversial, to me are actually one of the most problematic aspects. And I think this is why a lot of regulators are focusing so much on stable coins today, including, in Singapore, for example, where they're requiring massive capital buffers if, FIs hold stable coins, because these really are not currencies in many cases, right? There's a private issuer, and that token is probably best understood as a debt obligation, right? I've got a credit claim against an issuer. Very different from having a currency. I'm not sure if a lot of people understand that per se, that USD and USDC, for example, are rather different beasts. And I think that that's why regulators are so focused on it. And I think that's why CBDCs are so interesting to hold up that other leg, as Emma says, right? We need currencies and we need assets that you can trade. That said, I do think some cryptocurrencies like Bitcoin have a good shot of playing a real role as a currency, right? And that people can start to use that to trade and settle securities. But for that to happen, you're going to need to see issuers wanting to actually denominate the securities or denominate their bonds, let's say, in Bitcoin terms.
Yeah, I think we're a long way from that because, it's just too volatile. So we would need to see some significant changes, I think, in the market structure before those became true payment tools. But who knows? Maybe I think stable coins were meant to fill that gap, but I think we have some concerns about how these stable coins are structured and what's behind them. We have a question here. Is the market bored of the apes? I think, Henry, I'll leave you to answer that. We sort of started off at the beginning of the talk, sort of mentioning that. I think Yuga Labs has had a rocky time this week. And obviously the NFT market is sort of having a pretty bad couple of weeks, but nonetheless, it's garnered a lot of headlines. And I think what we're trying to do here is create legal. We're talking about contractual, legal, regulated securities as opposed to the apes and the other meme type crypto assets. But Henry, we will see these come back in some form, I'm sure. What do you think?
Oh, sadly, I don't think the market is bored of the apes. A bit of volatility notwithstanding, they've still magicked up billions of dollars worth of value. And to me, that really is a symptom of hype and speculation, as you say. And even very prominent figures, right? People like Vitalik are saying this is worrying, right? And for someone who really drives the biggest, let's call it blockchain, right? Ethereum, on which a lot of things are built. For someone like that to say, I'm really not sure about the majority of assets and projects that are being created, I think is quite interesting. And I worry particularly about the fact that we even call these things NFTs, right? NFT is in many ways a tech label. It's a non-fungible token. You've got fungible tokens, you have non-fungible tokens, makes total sense. But to say I'm going to invest into an NFT, to me, makes no sense. We should say I'm buying an art token or I'm buying a utility token, whatever you're actually trying to represent. And what I think needs to happen, the crypto markets generally, in the NFT markets as well, is for us to take the next step and say, look, the tokenization made a lot of sense. What is that token representing? Is it being linked to an asset? Even if it's an art token, and even if that art is purely digital, an NFT does not give you any kind of ownership rights or copyright, even over that digital piece of art. And one of the biggest problems today is that 80% of NFTs out there are stolen, right? They don't actually represent the original artist's work. Someone has just gone on DeviantArt or whatever, stolen the art piece, printed it as an NFT. And I think that for all the tokens we're talking about, we need to start saying, what are the legal contractual rights that it represents? What am I getting? Is there utility, etc.? And I worry that people just aren't asking those questions right now.
So just adding to Henry, right? That is why I think, more from a personal view, is what will be interesting is more about tokenizing of the fund itself than actually the art or anything like that, right? So sort of like the vehicle that investing in art or any sort of a real estate, and actually that piece of real estate itself or that piece of art, I think there's an opportunity there, and that's kind of tied to that private asset sort of a conversation earlier. Yeah.
Thanks. I think another Yeah, Emma, please go ahead.
Sorry, just wanted to add, I think we need to look beyond the hype, and as you know, Henry said, there are different type of sectors and aspects that we want to digitalize, being art, music, you know, wine, etc., etc. Whether they are non-fungible token or, you know, fungible token, that's a different story. But what I think is interesting, you know, for us, and it's not maybe the topic of today, is NFT brings people together, they create communities, and behind, you know, you have all the metaverse, the experience. So it's more a matter of how do you engage, you know, with your potential customers, etc. That it opens, right? More than, you know, just the board apps themselves. Yeah, I just wanted to highlight this.
I think what you could do is, you know, traditional finance can onboard some of those lessons. There's power in that. Whether, I mean, you can call it community or you can call it hype. You know, maybe they're two sides of the same coin, but nonetheless, right? It generates excitement, and even if there is speculation, you know, you need some degree of hype and speculation to get people interested in anything. So I think that there's maybe some lessons in the way that companies can help generate some activity in the regulated security space by using some of these technologies that people are keen to experiment with, and providing the value add that having you know, the immutability, the data, and all these things. So, you know, respect that. And I think the other point on NFTs is, you know, Henry made the point about what is behind it. You know, is it a legal contract, which is a security, or is it you know, smoke and mirrors? But you know, the idea of non-fungibility is intrinsic to any kind of security, right? I mean, maybe not an exchange traded stock, because you know, one common share is supposed to be just like another common share, but a bond from the same issuer might be totally different structure, or share classes can also be different structure. So I think it's getting past that NFT meme phase and getting into the fact that we're using this technology to help represent things that are different. And it's just using the technology to be able to represent them and trade them and account for them in a more efficient way.
Absolutely. I've posted an article in the chat because I actually think it's quite relevant to everything we've been talking about today about ownership and real assets. And I'd highly encourage people to go read it if they haven't. It's written by this guy called Moxie Marlinspike. And if you haven't heard of him, he's the guy who created what's known as the Signal protocol, which powers basically all end-to-end encryption in basically every app we use to communicate today. WhatsApp, Zoom, you know, everything. Probably in that measure, the most influential cryptographer in history. And go read that article, because he has some very interesting things to say about NFTs and Web3, including, as we've been talking, that question of, do you know what you're really getting and what you're owning? And more specifically, are you clear about who controls this token that you think is immutable? But yeah, go read that.
Yeah, I did read that. It's interesting because he did an experiment, and it turns out that depending on where you list it, on which platform, then the actual digital object that he thought he had was actually different. So yeah, I agree. Interesting article. We've got some questions left and we're running out of time. So I'd like to try to get these in as best I can. So on this NFT thing, there was a question about these things require a technology stack that is ubiquitous. So, you know, we're seeing lots of blockchain companies with, and lots of decentralized apps being built on different blockchains. These do not interoperate, obviously. So if we're talking about tokenization of securities, that are licensed, regulated, legal instruments, how do we get around this issue of interoperability, or making sure that everybody's got access to one tech stack? Henry, you're the tech guy. You want to give us a brief on that?
I don't think interoperability is as big a question as people think. Right? It's not always a tech issue. It's a standards issue, let's call it, right? So if I have some assets that, let's say, don't have identity linked, and I have a bunch of counterparties that need to trade assets of identity, I've got a fundamental problem, right? So how you bridge different blockchains, these are actually very solvable problems. The issue today is that there isn't a lot of clarity about what are these tokens in the first place. Even that label, when people say security token, they mean some very different things. Even when someone says equity token, it can mean some very different things. Obviously, as an exchange, we see our fair share of prospectuses and etc. and I read a lot of them. And I'll be honest, sometimes I read them and I'm still not 100% sure what they're selling, right? It's not a share, it's not a fund, it's an other, right? And I think this is exactly why a lot of regulators freak out and say, oh, this is too complex, don't do it. And I think if we just say, you know what, let's first agree on, okay, this is equity. We have rules around how shares work, changes a bit from jurisdiction to jurisdiction, but still well understood. We just need to sort out how we sync at the tech layer. That's how I think we can actually move forward.
Great. Question for Emma. Do you think that we should first focus on just tokenizing the fund unit and leave the underlying securities for a future stage? So the person saying, is this maybe a more efficient way to get started?
I would say it's important to work on both because, you know, it's not the same technological stack. And at some point as well, you want to, you know, reap the benefit of blockchain on both sides to offer, you know, all the features you want on the fund for the clients. So I think, yeah, working on both is important. And then that's where you have a nice conversation as well with your custodian, right? So, you know, with a journey like that, you say, okay, you know, you can have a clear understanding of where, you know, the custodian is heading on both directions and, you know, and really, you know, linking the two pieces. I think it's really important, not only, you know, back to the former question that was asked on the technological stack, because, you know, for me, it's useful to know the underlying securities on what type of tech stack, you know, you're going to have them, because at the end, you know, a lot of asset managers are looking at, you know, tokenizing shares, but on really private blockchains. So I'm not sure, you know, how fast they're going to be able to, again, reap all the benefits if they stay in a closed ecosystem. So that's just, you know, some food for thought.
Okay, good. We're going to have to do this webinar another 6 months, I think. Last question, Johnny, this person saying, can a corporation raise its capital through NFTs? And I think maybe just broaden that out. Can, you know, are we at a point where corporates will be able to do fundraising through, let's say, blockchain rails? I mean, I know Henry's big on this, but Johnny, what, from the institutional point of view, do you see this happening?
Yeah, I think it's happening, right? Whether it's I think whether it's a private space, I think public space probably, you know, in the sense of the traditional IPOs, probably not so much yet, right? But I think we see you know, on the alternative space, it is becoming more like a trend. But again, I think it's a little bit of try learning at this point in time, but it's important in terms of the growing adoption because we're all going to that directions of better, cheaper, faster, and it's good for everyone. And this token and the more we can digitize the assets through tokenization, absolutely. I think you know that is the path that everybody want to go through, right? Better, cheaper, faster, into accessibility, liquidity, mobility, utility. But is tokenization is the only way to solve this? We don't know yet. Time will tell. But it's, at this point in time, seems to be you know a main sort of path that everyone is investing in. Great,
Henry, we've got 1 minute. Capital raising, IPOs, debt issues. How close are we?
I think these are things that we can do today. Obviously, firms like Fusang would love to help if there's anyone in the audience who wants to do an issuance or a listing. But to me, the question is always, as an issuer, what is your product, so to speak, right? You need to start by getting very clear what you are selling. Is this equities, is this debt, etc. The technological operational process, people like Fusang can help you figure out. But that tech does not obviate the need to figure out what you're selling in the first place and how you're going to market your company.
Which is true for any kind of capital raising exercise. We are out of time, and I wish we had more because this has been really fascinating and we're getting a few more questions in. I apologize to those people putting in questions. We don't have time. It's 5 p.m. here, 6 p.m. Sorry. Thank you so much for joining us. Thanks to the audience for coming in. And of course, thank you to Henry Chong from Fusang, Emmanuel Petanicic from Fidelity International, Johnny Wijaya from Bank of New York Mellon, and for DigFin, I'm James DiBiasio. See you all next time.
Take care, everybody.
Thank you. Take
See
care.
you all. Bye.